After 2 days of market weakness on Wednesday and Thursday, with the market selling off 2.5% on the S&P 500, we had a little bit of an attempt at a bounce here on Friday. Kind of failed Friday afternoon. You can see we are right in this lower dealer cluster zone. As we mentioned in our last video, this is an area where we often see some sort of attempt at a bounce. This G2 level signals on our dashboard the largest negative gamma exposure concentration. That oftentimes can be a bounce zone as traders close out their puts. And two things can happen from there. Traders can either roll down the chain to lower strikes, which we really didn't see happen too much on Friday, or as they close out those puts, that causes dealers to start buying back shares as they unwind their hedge positions. And so that obviously has a natural upward move in the price. And so that's a big potential here at this level, right above the 5,700 strike. That's something we're going to be watching for next week. Next week's a little bit of a wild card with the election coming up. So, all eyes on Tuesday and Wednesday is going to be a key factor, I think, for the market, at least in the short term. Let's just jump over to the Qs really quick. Price closing around 487.43. The largest negative gamma exposure concentration is at the 488 strike. That is all negative gamma exposure. Most of that is rolling off as of Friday's expiration. And so the fact that we closed right around that level, and a lot of the 0 DTE contracts are rolling off, of course, both on the SPY and the Qs. Are market participants looking to position lower? So far, it doesn't seem that way. We're not seeing a ton of negative gamma exposure coming in. We're going to monitor that on Monday morning to see what the 0 DTE GEX levels look like. We get real-time updates, of course, on our dashboard every 30 seconds. And so that's something that we're going to be monitoring as soon as the market opens. And even though we did have weakness, as I mentioned, in the middle of the week, we are really still in this range. We're at the lower end of the range now, of course, the range that we've been watching for the last couple of weeks. This is the same on the Qs as it is on the SPY and the S&P 500. Let's just take a look at broad market sentiment, the AAII Investor Sentiment Survey. This is a weekly survey report where basically for last week, we ended up being essentially neutral. We're right around historical averages where bullish average is 37.5%. We closed at 39.5%. Everything looks pretty neutral, which is interesting to me that the market is not from a sentiment standpoint, taking a more bullish point, because as far as the betting markets go with the presidential election coming up, bullishness does seem to still be the case as far as election bets go. So interesting that investor sentiment is a little more conservative here. We're coming off of strongly bullish sentiment here about 3 weeks ago, October 9th. That was near the 1-year bullish high of 52.9%. So that was pretty significant. Obviously, we saw market weakness over the last several days, and really we just couldn't get above that resistance level on the S&P 500 over the last couple of weeks, and I think that's a big reason for it. Bullish sentiment was really kind of coming down over the last couple of weeks. As far as the earnings calendar is concerned, we're pretty much over the hump there. Next week's reports, really, as far as market cap goes, Berkshire Hathaway being the largest market cap that's reporting. Qualcomm could be interesting to watch. We've got a few company specific reports that could be really interesting, like Palantir or Airbnb, for example, but those are not going to be market moving reports. So I think we are over the hump as far as earnings goes. The election is coming on Tuesday. And after that, I think we'll have a better picture for where the market direction is going to be heading into year end. In terms of the gamma exposure structure, 0 gamma here on the S&P 500 is 5,800. So we've got a little bit of a ways to go to get above 0 gamma. Implied volatilities are relatively high when looking at the implied volatility over the past year. So that's also something to pay attention to. But, with the gamma exposure rolling off this last week, most of that negative GEX is going to be rolling off. Doesn't mean we're automatically going to be in positive gamma next week, but we've got a little bit of a better shot after this week has closed out. Interesting to me, there's still large gamma exposure at the 6,000 strike, the 5,900 strike. Doesn't look so big now because we've got such a large negative concentration here, and we've moved lower as far as price goes, coming down to this level. So, the more momentum starts to shift, if it starts to shift up the options chain, then these are the key levels to watch, because these gamma exposure concentrations are backed by open interest at these levels. And there's large open interest at the 5,900 and 6,000 level on the S&P 500. Most of that, of course, is into the year-end expirations, maybe even January expirations. So if momentum comes back to the market, these are going to be the key levels to watch. When you hear people like Tom Lee and some of these other well-known analysts come out with targets like 6,000, it's no joke. People are putting bets on in the market at those levels. So these numbers aren't pulled out of nowhere. They're driven by fundamental analysis, and they're driven by data in the options market. And this is exactly what we're seeing here on our gamma exposure. And so you got to be able to break this down as to what does the total picture look like, and what does the near-term zero DTE picture look like. So if you can take out the zero DTE, like this big negative chunk here, get rid of that, and then you really start to see, hey, what are the big concentrations looking like heading into the next few weeks and into year end, for example. So let's just run through a few names that have been on our watch list for the past week. Amazon reporting earnings, really good earnings report. It did come and tag this 200 strike. That was one of the large gamma exposure concentrations. We highlighted this before earnings. We typically stay away from these earning plays, but oftentimes where the market is positioned in the options market is where price ends up going. There was a retracement off of this level, so we closed right below that at 197.93. Any weakness in Amazon back down to the 195 level, maybe 196, I think would be an interesting spot for a long play back through the 200 strike, especially if we see any kind of positive bullish momentum in the market. So that's going to be an interesting one that we are watching this week. Let's take a look at Apple. Apple also reporting earnings, sold off quite a bit into and after earnings. This is one of those names where the market participation in the options market was wrong. Concentration was in the 240 to 250 range, and we have not seen a move up into those levels like the market was wanting. And so this is why we say there's no real edge in earnings plays when it comes to option strategy on short-term contracts. So it's a little bit of a toss-up. You've really got to manage your risk if you're going to be playing these earnings plays based on gamma exposure, because again, gamma exposure is a reflection of market interest, and the market is not always 100% right. We like to follow where the market thinks the levels are, but we want to go where there is a momentum edge as gamma effects help us roll into these levels. We lose that edge during earnings plays. However, that being said, we are coming into an interesting level here on Apple, right around the zero gamma level now. So the way the options market is currently situated, we are at previous support. Zero gamma, which is the blue line, is also a natural inflection point in the option market structure. And we do still have this gamma exposure here on the upside. So while the earnings play didn't work out, for a longer term play, potentially into the December options expiration, so it may take a few weeks for this to play out. One possibility, though, is that Apple finds its footing here around 220 and makes a momentum move back up into this 240 range. That's something to watch for, and it may make sense from a risk-reward perspective to look at this type of play. Microsoft, here's another one. Microsoft really didn't have a good earnings report, caused a lot of the weakness we saw in the market Wednesday and Thursday, and Microsoft trading right above its zero gamma level here, the blue line. This is also sort of a previous support level. As we go back into October and look, gamma exposure picture is a little more mixed here. There could be some further downside, and Microsoft may be into the 400 strike. The odds are approximately the same that we could bounce here or have further weakness down into these lower levels. So I don't really see a huge advantage. I think if you're going to play the gamma exposure structure, you want to look for a largely asymmetric risk reward approach where maybe you're risking $100 to make $400 or $500. That might be worth it for a move back up into this, 420 to 430 range, kind of fill this earnings gap here and make a move towards this upper positive gamma exposure structure up here. So that's something to take a look at. Again, considering your risk, that's got a long ways to go, and that might take a couple months to play out if it even does. So a little bit of a mixed picture with Microsoft. By the way, don't forget, if you want access to our gamma exposure dashboard and option flow analytics tools, head on over to geeksoffinance.com. You will also get access to our Geek University course, which is a 5-hour option strategy, volatility, gamma exposure, and our overall trading strategy approach. That is included for free for all members. Head on over to geeksoffinance.com and check that out. I'll put a link in the description below. Also, be sure to check out our community Discord, absolutely free. I'll put a link in the description below for that as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.